I think that's another big thing when we talk about high interest rates. High interest rates don't mean anything. They just mean you need to adjust your purchase price to make the numbers work.
I'm basically spending the entire year just adding value into my unit to charge as the appropriate rent that I can once I move out. Right now, I have 5% down to put down to the next property. But after doing all of the math and everything, the math just isn't mathing, to be honest.
Hey everybody, welcome back. I have Ibrahim Toure here. He reached out to me and was running into an issue based upon trying to invest and build his wealth and running into trying to figure out where to find cash flowing properties, as well as having some issues with high interest rates and affecting cash flows and wealth building. And so he reached out to me via email. And if this is something that you're running into, this conversation might be helpful for you. We're going to do a little back and forth, and hopefully I can give him some good advice to get him set on his way. So welcome, Ibrahim.
Thank you, Dave. Thanks for having me. Been following the Fit channel for some while, and I really liked what you did, and I appreciate you for just taking time to talk.
Yeah, no problem at all. We'll dive right in to try to give you as much value as possible. And I want to say, first of all, if ever you reach out to somebody, whether it's a mentor, whether it's somebody you're seeking advice, Ibrahim did this awesome thing where he sent me a full page of like, this is what I got going on. This is my salary. This is my job. This is the one rental property that I purchased. This is how much it cash flows. This is more. That's awesome. That like rarely happens, and you're going to get much better feedback. When I saw that, I was actually gave me the warm and fuzzies. I was like, okay, he's got it kind of squared away. He's trying to figure it out. He's doing some self analyzation. He's not just asking Dave Hathaway to solve all of his problems. At least you're doing some like analyzing and saying, okay, this is what I got going on. Where do I need to go from here? Or am I doing the right thing? So you're starting to ask the right questions. So I greatly appreciate that from you, but I also want to share that if anybody else is reaching out to anybody, definitely if you're sharing like a big background, that is important, and it's going to be well received from the person that you are reaching out to. So, and just to give a little bit of background on Ibrahim, it looks like he has a great job with a high salary. He actually lived up closer to me, but moved down to Hampton Roads. And I'm actually looking at his email right now. And then you can correct me if I'm wrong. You purchased a rental property down there in Hampton Roads, which was a duplex, your first ever purchase, right?
Yep.
And then you rented one unit out for $1,200, another unit out for, it looks like you live in the other unit currently, but your mortgage payments are $2,192. And I don't know if I mentioned it, but your salary is $92,000. I hope you don't mind me sharing that. So it seems like, you got a good head on your shoulders. You got some stuff to fall back on in W-2 income, which is awesome. You got a 401k, you have some money to invest. You have a relatively large emergency fund of 18 grand. And then you have some reserves and repair, and you're just having trouble with finding like a cash flowing property. But that aside, I definitely think that analyzing properties a lot is a superpower, and that you should be analyzing like properties over and over and over again. And that might be where you're coming into this hindrance of like interest rate and cash flow issues, is when you're doing those analyzing and going, man, I can't find anything. Is that where you're finding like where you're getting roadblocked?
Yeah, for sure. Because as I was doing my analysis, I was thinking, okay, right now I have 5% down to put down to the next property. But after doing all of the math and everything, the math just isn't mathing, to be honest. So I'm like, okay, let's say I had 20% down. This would it'd be a way better deal if I had 20% down, or if I had less of a mortgage balance to work with. So
Yeah. I mean, in real estate, there's so many ways to skin the cat, as you will. I mean, it's not just buy and hold rentals. It's not just Section 8. It's not just market tenants. It's not just wholesaling. It's not just flipping. There's so many ways that you can make money. And sometimes in different markets, we have to pivot, or sometimes we have to invest outside of the market that we're looking to be in, or sometimes the market that we're in is better for somebody that has a lot of cash and maybe not as good for somebody that doesn't have a lot of cash. And so you definitely want to continue to analyze. I think, you know, always analyzing and looking at different markets. That's why I do that deal day video where I analyze a new property, new market, because it really stresses the importance of just getting really good at analyzing, but then also getting really good at one particular market that you want to invest in. So really like casting a wide net and then just getting more focus, more focus, more focus, more focus. Because then when you, if you're looking at like the whole state of Virginia, it is really hard to pick out the good deals. But if you're looking at a certain zip code and then even filtering even further down, certain zip code of certain property types, maybe 3 bedroom, 2 baths, and nothing under that. So you're filtering all your 2 bedrooms out, or your 1 bedrooms, or maybe you want a niche in 1 bedrooms. I'm not, but the key here is that you want to just really get like focused on one property type. And then so when that property comes available, it's almost like second nature that you're like, oh, that's a good deal. Even before even analyzing it, you go, I think that's a good deal. And you dive deeper. I think that's a key characteristic for people that are like super successful in real estate is they can look at a list and they can, where it might take you a little bit longer, I can look at a list in my target market and go, those are the 2 properties right there. I think they're going to cash flow really well. And maybe I'll dive deeper and go, I don't want this for whatever reason, but I know that those were the 2 properties just by looking at the list and just by knowing the market so well. And that sometimes just takes time. I also want to, I put up, listed a few things down that I want to hit for you that are super important. First is like mindset, is that it's really easy to get in the mindset of like, hey, I want to have this wealth tomorrow, or I want to build this wealth,
Yeah.
that is so how we all think, how I thought. I've been doing real estate for probably a little over 15 years. And I mean, it takes time. It is a long-term game. It's very rare that you do like a wholesale deal and you get $100,000. That is a rare thing. And you shouldn't think that that's the norm. That's outside of the norm. Wealth is built over time. And you're basically like, how can I make some like, not 100 decisions, but how can I make like 1, 2, or 3 good decisions that 10 years down the road, my 35-year-old self is gonna be like, damn, that was a really good decision, Ibrahim, when I purchased that one property or purchased these 2 properties and they appreciated $100,000. I didn't really have to do anything. And I just gained wealth because I made a good decision. So I do want you to think like, hey, it's a long-term thing. It's not going to happen overnight.
Mm-hmm.
And so that's like one thing I think people kind of overlook, and they're just like, oh, how do I get to like 100 properties really quick? And you can do that. And some people do it, but a lot of times it's really stressful. It's like extremely stressful. So mindset is a big thing. The other thing that I want to touch on is just how you're dealing with your finances. You have a pretty good job right now. You're making a pretty high salary compared to most people in the US. How are you saving? How do you have that like broken up? Do you put some money aside for saving? Do you put some money in a 401k? How do you work that?
So for managing my finances for the 401k, that's deducted out of my paycheck every month. I believe it's about maybe 150 or so, and then the company matches it. Outside of that, for the actual personal financing part, I wanted to get to at least 6 months of a 6 month emergency fund, which is what I have saved up currently.
Yeah.
From there, I wanted to put all my profit every month towards investing in the future. So what I have, the system I have right now is on the fourth of every month, I calculate all the transactions that have gone in and out of my bank account.
Hmm.
Um, Afterwards, I save it in a file, see how much money I profited, and that goes towards my investment fund. I still have budgets for everything, but and I know there's systems out there that I can actually do everything for me instead of me manually adding everything up. But for me, like it really makes you look at yourself more as you're like putting in, adding up all the transactions and stuff. Like, wow, I did this, all that. Like, it really hits home more once you
Yeah.
add it up yourself. So, yeah.
Gotcha. How much do you think you're saving towards investing like monthly basis?
Between 1,500 to 2,000, which is not as much as I'd like to. My
Mhm.
fixed debt is outside of the mortgage. I have a $400 car payment.
Gotcha.
Um, but even that's not huge. I would say it's all the variable expenses that just happen, like that are keeping me away from saving as much. Like the random things that just happen. Just life.
Are
I'd
you
say.
are you married with kids? Are you?
No,
And how old are you?
25.
Okay. So you're super young and there's going to be probably a lot more variable expenses when you're married and you have kids if that's the direction you go. But
Yeah,
no,
yeah, and
I
that's
hear
the
you.
hard thing.
You're way better off than most as far as like saver. You have a saving mindset, which is huge. You have a system. I'd say your system's fine. Manually doing stuff is totally fine. I like to manually do a lot of my stuff, and I check my accounts daily. So I think that's fine. You can always do better. I mean, that's always a thing. There's never a way where you're like, I did absolutely perfect. You can always do better. But $2,000 a month is a good amount of savings. I think your emergency fund's probably way higher than it really needs to be. I mean, I don't really think you need 20 grand as a 25-year-old just sitting in an emergency fund. I think you could probably lower that to half and still be totally fine, especially knowing that rents in your area are so cheap. So normally my strategy is like, hey, you live in an expensive area, go house hack, rent a room. And that's how I started out. I don't know if you watched my Burr video where I was a police officer for 9 years. And a lot of people would be like, how are you purchasing like these houses? Like, I don't understand. And my epiphany was that, and I didn't realize it at the time, but I didn't have the housing expense. I was house hacking. I purchased just a townhouse, and then I lived in the master, rented out all the other bedrooms, and I lived in the house for free. I actually was paid to live in the master because I made like an extra, I don't know, $100 a month. And so I didn't have that expense that they had. And so when they're saying, hey, they're paying $1,500 or, $1,600, whatever, on their apartment, and I'm paying nothing, then I'm going to be able to buy a lot more houses than they are because I have $1,500 more a month than they do. And I'm also a saver. So, but I mean, you don't have like ridiculously an amount of expenses. So I think you're saving enough. My initial strategy when I first started was, putting 20% down on properties that were in semi-good areas and they cash flowed. And I aim to be somewhere around $500 in cash flow. That strategy worked really, really well. And now that I've sold off a lot of those properties from so long ago, they appreciated in value and they generated a ton of wealth, and they allowed me to pour a lot of that money into a bunch of new properties. And real estate's awesome because you can kind of recycle the money if via refinance, via selling the property, and you purchase one and now that one turns into two and that two turns into four. But again, that's a long-term game. But so where is your direction going forward? You're finding that interest rates are high and everybody's facing these same things with high interest rates, with cash flow. There's certain markets that still cash flow, and often you will have to do value add, which means you're doing some sort of renovation. Usually that means you're either using hard money. It's what a lot of people use if you don't have a ton of the cash, but you're still going to have cash. You're doing the right thing right now with saving $2,000 a month. So I think you're good on as far as your like savings background. As far as your market background, I mean, are you looking at just the MLS or where are you looking at properties?
Specific. Well, I don't really. I've been more looking into North Carolina. I'd say Charlotte and Raleigh to be specific,
Yeah.
because you know of how Charlotte is becoming more of a booming central for not just banking but for IT as well. So
Yes, I'll be actually stopping in Charlotte on my way back to look at properties and to actually get a good feel of the market. But it's actually funny that you brought Charlotte up, because we're actually going to do a deal day video on Charlotte. It's my next one that's on my queue. So I get to see like population growth, which I know is crazy high. But you're looking at Charlotte and Raleigh. Raleigh was where I purchased my first property ever. Great market, definitely appreciated a lot. And then, how are you looking at Zillow? How are you looking at those markets?
So I have yet to reach out to another agent over there who actually has the MLS access there, but I did take a trip there last month for a couple of days. Just saw more of the areas, the where the builders are constructing, so and so. But right now, I'd say for my market analysis, I'm looking at mainly Zillow.
Gotcha. I mean,
Yeah.
I use Zillow all the time, so nothing wrong with that. So, in your strategy, I mean, I do want you to also, since you're a newer investor, you're a different season in life than per se I am, with 2 kids and a wife. You have a little bit more flexibility when you're only supporting yourself, but you also only have you have a one decision maker. So you're not gotta like run by, hey, do you mind if we Airbnb the basement out to like somebody? You don't have that uh, conversation that you have to have with a significant other, which makes it's nice because you can open up your strategies a little bit. And it sounds like your initial strategy you were thinking is like buy and hold rentals, is what I'm assuming. That's what you
Mhm.
did with the duplex. Hey, let me get this duplex. Let me get a buy and hold rental. And that can be awesome. But since you're in this season, since you're 25, since you're in the season, you have a good paying job. I also want you to think other strategies, even creative strategies, even like purchasing maybe even a new construction and maybe higher bedroom count and living in one of the bedrooms, similar house hacking to how I did. A lot of the affordability issue that people talk about is we don't even think like, what would somebody pay for a bedroom? And I mean, around me in Fairfax, where you used to live, I mean, there's people that pay bedroom rent in Fairfax for like $1,000. And so if you have a 5 bedroom, I mean, your mortgage is under 5 grand. I mean, so it's a different strategy, but it's something that you can look at where if you're like, hey, I don't have the cash flow now, that's one of the ways to get the cash flow. So
Yeah.
try to think outside the box a little bit.
And I
So
love that you
that
said that
yeah,
because
it's one, I mean, one strategy. New construction, I feel like is in a little bit of a hard spot right now. So, especially in areas like Charlotte, I mean, those are semi areas that I kind of want to start looking at. Charlotte, Myrtle Beach, Atlanta, Georgia, these places that have like, I mean, it's just the builders are actually cutting their prices and they're finally starting to fall. And you'll probably start seeing things on YouTube of like, oh, the builders are crashing. I mean, I did a video on it, just how many permits were pulled over the last like 3 years. And it's like double and triple what the normal is. So that can't, unless so many people continue to move, that can hurt the
Mhm.
builders. So that's just one way to get cash flow if you're strictly looking for cash flow. And probably if the idea, which I know later on, which is awesome and it shows your long-term thinking, you said in your email, long-term financial goal is 75K in passive income. Now
Yeah, and I know that's pretty
that
ambitious.
is a big passive income, my friend. That is a big passive income. I love that you're thinking like that. So that's, I mean, there's nothing wrong with having that goal. And when we think about like rentals, if you think about even just like, so my bread and butter was $500 with per rental or per unit. And so even with like 20 rentals, that's $100,000. So it is does take some work, but if you think about those creative strategies and whether it's room rentals, whether it's not, and then other things is if you do that and you have the cash flow now, if interest rates do come down, and let's say you did do a room rental, and let's say it does cash flow $500,000, then it will cash flow even more. You're like, oh man, cash flowed $1,000. Now it's cash flowing $1,500. But I think common mistake from investors is to just assume that interest rates are going to go down. And so I'll just refinance and let me just put this in my calculations is that I'm going to get a 4% interest rate. Might be the case, but I don't think you should bet on that. It's speculation. And so you should always be good with what you bought currently and not be like praying for interest rates to fall for it to be a good rental. It should be a good rental. And that might just mean that you need to adjust on your purchase price. So I think that's another big thing when we talk about high interest rates. High interest rates don't mean anything. They just mean you need to adjust your purchase price to make the numbers work. So don't, when people say high interest rate, it is what it is. Investors that I'm friends with, we're still purchasing. We're all still purchasing. I mean, it's just that we just adjust our prices. And then if the interest rates fall, then it will be great because then we'll have more cash flow. We'll just refinance and all of a sudden that $500 will go to $750 or that $400 will go to $650. So just think of that when you think of it's a mindset shift with interest rates and not being like, oh, whoa, me, interest rates are so high. It's just, okay, now I just have to offer $25,000 less and maybe I have to put a few more offers on a few more properties. That's all. The other thing, I mean, you talked about you're starting to look at Raleigh and this is something that I noted down my card. And the most important thing, especially if you're not in the market, more importantly, if you're not living in the market, is your team. I know the word team gets like thrown around, but do you have anybody that you know in those markets, like any real estate specialist in Charlotte or Raleigh?
Honestly, no, I don't at the moment.
Okay. So the first thing that you're going to need to do is find an agent and you're going to need to find a property manager. You might be doing that all yourself, but when we think about team in general, the more people that I have, whether it's a mentor, whether it's a leasing agent, whether it's a real estate agent, all those people add like layers of protection for you as far as like ideas that you throw off them of like, hey, you're an idiot, you shouldn't rent that. Those are the people you actually want in your life. I don't know if I would do that. I don't know if I'd purchase that with $200 cash flow. You want those people that are going to make you check yourself, not into paralysis analysis, but just like, okay, this person knows what they're talking about and they're saying, I don't think we should do this. So maybe I need to go back and rerun the numbers, make sure I'm comfortable with it. You're going to be the ultimate decision maker. So even if you have a mentor, you need to be comfortable. Even if they're like, this is the best deal in the world, you got to be comfortable because they're not the ones that are purchasing the property and going to be running it in the future. So you need to have like ultimate accountability of like, okay, I'm good with this. They're saying it's good. My realtor says it's good. All flags are go. Let's rock and roll. The more people on your team, and then the more people on your team is the more people that you can ask for referrals. So I need a handyman. I need this. I need that. Do you guys know somebody? It's like my favorite thing is like asking A players for their referrals because A players don't work with C players. A players work with A players. It's the same thing in probably the IT world. If you have like somebody that's really strong on the team, like a developer, and there's somebody that's slacks, that's like, this person's dead weight, that A player is going to go, I don't want to work on the team with them. They're just dead weight. But if they're working with another A player, they'd be like, I love working with Ibrahim. He's crushing it. And so it's the same thing in I feel like in all industries. If you are at a high level and you're doing good, you want to work with people that are doing good and you don't want to, put your name behind somebody that's not doing good. So developing your team is just big in those markets if you're okay, but you're going to have to narrow down. It's going to be much harder for you to, going back to initial thing that I said, much harder for you to find a property in Charlotte or Raleigh, I believe. Raleigh. I got probably a bunch of internet haters and be like, oh, this guy is butchering the name. Probably. Why don't you listen to it before? But is if you're looking at both those markets, it can be way harder for you to find a property than if you filter down to this is the market. See what I'm saying? Yep. You're not going to be able to look through 2 lists and you're going to get overwhelmed. You're going to go, man, this is like a ton of properties. So figuring out what market you want to be in and really diving deep on that market is like super important. So you become the specialist and you're like, okay. And having your team is important there too. And the more people that you have, the better you're going to get a good feel and the better you're going to get like warm and fuzzies when you're like, I'm really thinking about this area. And it doesn't mean they're perfect either, especially when you have new eyes in an area. Sometimes people will blanket zip codes and it's important for you actually either to trust and just have the team do it and just be like, hey, I'm going to be total hands off, or just drive and be like, hey, these properties are great. One thing that I've learned early on, especially in Baltimore, was people would blanket zip codes and they just say, you should invest in for instance, 21217. And they were successful investors, but grew up in Baltimore. And so when I purchased a 3-property package in 21217, and they said, why would you do that? You're an idiot. I was like, oh, biggest mistake I've ever done. Those are 3 of the properties that I've made probably the most money on out of any of my properties. And the learning lesson there was don't blanket a zip code. Zip codes are huge. I mean, street by street, if you go through and you like drive the block and you're like, hey man, this block looks really good. These people are waving to me when I drive down the street. Even if somebody says it's terrible and your gut's like, hey, this is a good block. It looks like it's blooming. Sometimes fresh eyes is like a good thing. What else? Get focused, filter. Already chatted about that. The last thing you ask in your email was if, or one of the other thing, bonus question was like, if I partner with people before, this is a good like segue. So I have partnered with many people before in many different facets, whether it's doing the rehab for somebody that's like, hey man, I suck at rehabs. Can you just do my rehabs? So I've done that as almost like flips for people. I've wholesaled to people where I'm like, I'm not totally sure I want to take this building down because the rehab's big and I don't know if I have enough cash set aside to do it. And then sold those buildings off to other people where I'm like, hey, this is a good deal. This is going to be a good deal. I just don't want to take it down because it's going to need a lot of cash right up front. And so I've done that before. I've lent money. I've done a lot of different things with a lot of different people who I've worked with the most. And I have this in one of the videos. I think it's like building relationships video on my YouTube channel. But it's the people that were in like masterminds with me that I met in person, developed a trust, and they were like, hey, I need 50K. Hey, I need this. And it's like, okay, I know this person. It's much easier to develop that trust or to, when you've met somebody and you've built a little bit of trust. And the lesson there is like, whatever market you want to, you figure out, hey, this is the market, whether it's Charlotte, whether it's a different market. Maybe you look at those markets, you go, hey, I can't cash flow. This is not the market for me. Maybe it's a suburb right outside of there, but it is starting to kind of get involved in those RIAs, get involved in, even if it's just Zoom meetings somehow, where people can see your name and they know who you are. And so if you do show up in person, they go, oh, I know who he is, if that makes any sense. So I have partnered with people. I'm considering doing like a mentorship in the very near-term future of 2 people where it would only be people that wanted to invest in Baltimore. And it'd basically be like, I provide all my contacts, i.e. my construction crew that I work with. They're not really my construction crew, but all the contacts that I've developed as my investment journey is slightly different as I transition into syndications. As far as investing in syndications as a passive investor, after you've been active investing for a really long time, when you just receive money from other people and don't have to do too much, it becomes kind of a nice thing. You're like, oh, this is awesome. I can just receive money for these awesome buildings that are being purchased. So, and my crew or the construction crew and the people that I work with, it's like, I mean, I've already developed it. So that is something that I'll probably announce in the next month, and I'll probably only take 2 people and get them, it should be able to get them through 1 or 2 properties. But what other questions, quick ones that you had that I can answer or stuff that I haven't? I know it's a lot of information I just threw at you all at once.
I'm glad it's recorded.
Yeah, I mean, you'll probably go back and be like, oh, I totally missed that. But was there anything else that you were like really searching for that I can help you with?
No, you really hit on all the points that I really appreciated. I think at this point, it's just like, it's on me to just follow through with what you said. And like you said, like I'm making a good salary for my age, but for what I do, I believe for what I do, my strengths could fit better in another role. For example, I do cybersecurity right now, right? I'm a cloud
Hmm.
security specialist.
Yep.
However, I feel like if I was in a role where I'd go out there and make connections, for example, let's say I was an agent for my company because we have an insurance division. If I were to help them sell cyber insurance and solutions to other companies in a role where I can more actively have a role in my earning potential. Like if I were to take that gamble on myself for all the strengths that I have right now, and that would better fit me. I believe that kind of role would better fit me personally and potentially financially because I'm looking to make even more in the future, if that makes sense. I'm going in a circle.
Do you not like your job or what you do? Just out of curiosity.
I like it. It's fine, but I don't love it, and I don't see myself doing it forever. Whereas I feel like being an insurance broker, I could definitely see myself doing that for a long time.
Yeah,
So
if there's any, always upping your income, and if you're good at sales, and it's always a great thing to up your income however you can. So there's no qualms in exploring that, especially since you already have a good salary now, and sales is. I did sales in college, and sales was great. It taught me a lot.
for sure, for sure.
Um, back to, I'll circle back to your duplex real
Mhm.
quick. We'll circle back to your duplex. Your duplex is something you can always just keep as long as it cash flows, but do realize that at times you might have big expenses, whether it's the roof, whether it's the siding, whether it's the HVAC. HVAC is going to cost you $6,500. It just is what it is. It's going to cost, so if that goes out, you can kiss your cash flow goodbye even more than your cash flow. So it's something that I would definitely consider. If you think rents are going to continue to appreciate, which $1,200 is pretty cheap. Portsmouth is a cheaper area. If rents could go to $1,400, that changes a lot. Right. That means if the rents go to $1,400, your cash flow doesn't equally go up that much. So your cash flow wouldn't go up to $600 a month, probably go up to $500 a month because insurance usually increases, everything kind of increases. But just something to think about. And at the very least, it was a great foot in the door, and I want to applaud you for taking action on your first property, because most people just get stuck and they just go, what am I going to do? For my first property I purchased in Raleigh, I remember having the conversation with the agent just saying, just push me into a property. I've been looking at properties for 2 years. Push me into a property. And for some reason I did, and then it was all downhill from there. But that first one's always tough. So you got your first one out of the way, which is awesome. And that is your learning lesson.
For
And
sure.
in the future, I definitely make sure you're hitting, 350 cash flow if you're keeping it as a long-term rental. I still like the $400, $500 unless I'm pulling all my cash flow out, which is, if you can pull all of your cash flow so you have nothing in the game, then $300 might be fine because everything's banked from there, and then you can just put that money into a different property. But I don't think it's the worst idea to hold it, but I just think
I'm not at all opposed to selling it in the near future. Because I was gonna say I'd like to hold it because for like I did say the city looks like it happens. From what I'm seeing from the news, from what the plans are, the proposals, it seems like they're trying to build it up. However, I'm not that interested in holding this property for longer than 3 years. So, and I'm not even sure how much more rents could go up. I could start Section 8ing the bottom unit, and maybe that could help a little bit. But yeah, I'm not at all opposed to selling in the future.
Well, I definitely say that you should, at the very least, keep it for 2 years. And the reason I say that is because if it's your personal residence, which it currently is, and you sell it, any of your gains are tax-free up to, I want to say, $1 million. I'm not a CPA. I'm not an accountant. So this is all just hearsay, but you sell your property and you've lived in it for 2 years, you don't get taxed on it. It's one of the reasons why I love rentals over flips and other things where you're paying short-term capital gains on flips instead of long-term, it's always nice. Usually people fall into the 15% tax bracket when they're doing long-term. But another reason to keep it is it does have tax advantaged. You're paying down your interest. You're doing a lot of stuff that is helping you tax wise there. So I think you're on the right path. I think you just need to continue analyzing properties, building out your team, and determine which market you want to be in and which market makes financial sense, which it sounds like you've ruled out some, but it also means you need to dig deeper on relationships as far as wholesalers and other, not just Zillow, because sometimes you might find some really good deals there, and just continue building out that income, which sounds like you're doing the right thing. You're saving a couple grand a month. So you'll be able to put a nice down payment and hopefully have enough for a rehab. And if you don't, at least you'll have, be able to reach out to a hard money lender and do the put it money down, they pay for the rehab, refinance it out. That is the strategy that most people use until they have enough money to just purchase stuff in cash.
Gotcha.
And so that will be the route that you'll probably have to do. And we just briefly touched on it right before we hopped on this call. One of your concerns was, and when I look at it, the cash flow if you move out or when you move out of the duplex that you purchased, was that one of your concerns?
Yep.
And you were thinking that you could rent the other unit for similar, like 1,200, 1,250 maybe?
Mm-hmm. That's yeah, essentially that's about it. And like I was telling you, I'm basically spending the entire year just adding value into my unit to charge as the appropriate rent that I can once I move out.
Gotcha. And what kind of area are we talking about for the property? Is it like a decent area? Is it like, if you were to rate it on an A through F scale, what
I
would you
would
say?
I would call it a C plus area at the moment.
Okay.
It's definitely, the location itself is great. There's not much going on within the community itself. The city, Portsmouth, is emerging and upcoming. They're doing things to invest into it.
Hmm.
And the best part about it is the location, I'd say. It's super close to Norfolk, where there's jobs, downtown Norfolk and everything. Decently close to all the actual places that you'd want to be.
Gotcha. And so your current mortgage payment is right around $2,200. And if you were to move out and got, we'll just conservatively say, the same rent for your other unit, you'd be at $2,400. So you'd have $200 of cash flow. Definitely not huge, but it is something, which is good. And then is this a standalone duplex?
Mm-hmm. Yep,
Okay. And is it like it's its own building? It's a single family like duplex.
Mm-hmm. Yep.
Okay. And then outside of the building, brick, siding, is this going to
Yeah.
be is it brick or siding or both?
It's both actually. Like half of it is, it's an up and down duplex, half of it is brick. The whole thing is brick actually, but there's siding along the second floor of it.
Gotcha. Okay. And the first thing that I would say with that property in itself is you're not getting a ton of cash flow. $200 is pretty low for cash flow. And then the thing that stands out to me, my favorite investments are townhouses. And that is because the expenses on the property are much lower than single family houses. So you basically need much more cash flow on a single family house than you do on a townhouse because you're only responsible for two sides instead of four sides. And so those repairs can eat up your cash flow really quick. And when you're talking about having, let's say conservative $2,400 cash flow a year, I mean, if you have a roof or have to redo your siding, it's gone for like a year and a half and you are back to square one minus principal pay down. And so I'd be a little bit concerned overall if you're purchasing that same type of property that you would not be able to gain wealth as quickly. Maybe it's a huge appreciation area, but I'm always thinking like whenever I purchase a property, I want cash flow and then I want a little bit of appreciation, and kind of in that order. If I have no cash flow, then I'm going to eat up and I'm probably not going to be able to stay in the property forever because I'm going to get frustrated that I'm putting all this money into the property and not seeing returns. And so that's always number one. But
Gotcha.
I hope that helps. I mean, is there anything else that you had that was like that just sitting on the top of your head that you're like, hey?
No, nothing at all. I mean, I really appreciate I really learned a lot from this, by the way. So I really appreciate you meeting with me.
Yeah, no problem. I'm glad I could help. And I mean, I'll post up the live recording for you and everybody else that might be. I appreciate you saying that you would go on recording live because it does help other people. Instead of just helping you, can help few people that might be in your same situation that are too scared to reach out. So I
For sure.
appreciate you being brave enough to put all that stuff out there. I mean, keep doing what you're doing. If you need help or you need connections, if you're like, hey, I need Dave, I'm struggling with hard money lenders, or I'm struggling with this, reach out. I'll try to connect you with whoever I work with. Definitely for like lending and insurance. I got great contacts for any market. Not necessarily, I don't have an agent that I know that works in Raleigh, but maybe somebody watches this video and goes, hey, I'm an amazing agent in Raleigh. I've had other people that are like agents that reached out from like Alabama and stuff. So yeah, keep doing what you're doing. And I wish you the best of luck and hopefully we get to cross paths.
Thank you. For sure. For sure. We'll do.
All right. See you, Ibrahim.
All right. See ya. Bye.